Hello everyone and welcome to today's major markets update for Monday, June 6th. And thank you so much for your patience and understanding while I was away for a brief short period to recharge and refresh so I can look at the charts with renewed headaches again. Nothing has changed over the last week. The market didn't go much of anywhere. It's been going sideways, and this clearly shows you why it's best to zoom out. Last week was pretty much one day down, one day up, one day down, and that was it. Really, that was it. And today, a little bit of a sideways mess, a little bit up, a little bit down. Zooming out, as I showed you on the last Friday before I took my break, how important the bigger picture is and why we don't want to always zoom in on the scribbles, but just let those scribbles do their thing and then assess. So let's have a look at where we are then if we look at all those small scribbles. Because in the end, the details still need to match and work its way through time and price. So here's the chart I left you with on Friday. I was looking for a down, a up, a down, and then an up. This was the general roadmap I gave you with not too much exact levels, but simply the general path the market should take. Because we know after 3 comes 4 and after 4 comes 5. That's what we know. That's pretty much what I outlined. So then we go. There was, of course, no market on Monday. You didn't miss a thing. And this is what we got on Tuesday. Down, up. Okay, down, up. So far, so good. The down matches pretty well, matches reasonably well. And what happened then? We go to further down, back up, back up. So the market did exactly what I thought it would do. The roadmap was exactly correct. Did I get the exact price levels? No, but in all things considered, pretty darn accurate. I don't know of many people who knew back here that the market would do this. Okay? Now, then I'm then constantly being told that I don't know anything and my subscription sucks. That's something else. I think the problem is with the receiving end and not with the giving end. But that's fine. Can't change an idiot. So now the question is this wave 4 complete? Is wave 5 complete? And are we now in a larger pullback? Okay, that's pretty much where we are because this is where we are today. The market has fulfilled its down, up pattern. So we can logically erase these arrows and think that we might have completed wave 1A. Okay, so then we have wave 1 here, wave 2 here, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5. Okay, so if we start breaking lower, there are some key levels to watch, then we're gonna move lower. So we really want to, of course, see this, and I'll show you that in a minute, using the other indexes, that we can still subdivide a little bit further for a wave 4. So then, of course, the alternative count is that this is still only 3. What I do like, though, is that we reached 176.4% extension. That's typical for a fifth wave. Okay, and the alternative is that we simply have a wave 4 still developing. Fourth waves are nasty tricky. Let's keep it at that before I say bad words. And then we can still get a wave 5. We need to break, of course, above the high made there. Then we have wave 5. That is in green. Until then, we're not in wave 5. And if we start breaking below the 100% extension, we are in wave 2. Very simple. All right, these are the parameters /B, because we don't know yet if it's going to be an impulse higher or not. Okay, so far so good. The projected path has been met as anticipated. Here is then the daily chart. Okay, I don't know why that vertical line is in there. Let's take that away. This was the vertical chart I presented as well. And I think on the daily chart, we can see also nice 5 waves up. Straight up, a down day, straight up, 2 down days, straight up. That's 5 waves in my book. And we could now be working on this wave 2B. I haven't changed any of the position of the labels or anything. Okay, this is exactly as anticipated. So far, so good. I like it. We bottomed here in this ideal wave 5 target zone. So we can maybe start to do a nice little assessment here where wave 2 should bottom. Somewhere around here, this green arrow is still the same. Looks pretty good. Doesn't have to. We'll see. And then let's say we're going to bottom here. Then we're going to do wave 3 somewhere about there. Not much different from what I originally anticipated. And then we do wave 4 to about there. Of course, assuming, that we have a standard ideal Fibonacci based impulse pattern. Don't have to, but this would then be wave 4 right there. Also pretty much as anticipated. And then of course wave 5, which is going to be a little bit lower, but that's fine. And wave 5 is going to go to somewhere there. Wave 5, this would then be wave 1. 2 would still be the same for potential 1, 2 setup. Okay, so far things are progressing really nicely. You can see we've done really, you know what, 2 things, Jack and so far. Nothing to see here. Move along. This has been quite the whipsaw. Bullish, bearish, bullish, bearish. What are you going to do? Well, we're going to zoom out. That's why we zoom out. And so far the price action has been quite, I would say, nice. I don't see any reasons why I would need to change my point of view. I still think there are way too many bears out there, but hey, who knows? Maybe for once they are finally right. Unfortunately, over the entire history of the stock market, the bears have always been wrong, in the sense that the bears always think it's the end of the world and everything is collapsing and ending. It certainly hasn't happened. So the hourly chart path has been filled in. The daily chart path seems to be filling in as well. I can count 5 waves up, again with the alternative notion that this wave 4 can become more complex. Okay, it can become, for example, 3, an A, a B, and a C can become more complex. That's the trick with 4th waves. If we move lower, then we have this wave 2B, and then we're going to look for 3C. Now, I do need to share the last alternative with you. I would think it is here, and that is that we have this alternate Elliott wave count of a complex flat B wave. Wave A bottomed here in May 12th, A, B, and here is then C. Also here it has followed the general path quite well. I'll take the Fibonacci extensions away here. So this would then be 4, this would then be 3, this would then be 4, this would then be 5. Okay, down, up, down, up. I like it. Okay, so far so good. And that would then be C of B. And then we're going to get another C wave massively lower. We'll deal with it if we start breaking well below the May lows. Okay, this is the alternate Elliott wave count. There's always an alternate option. Please be wary of those that only present one side of the coin. There are always 2 sides. Okay, 1, 2, 3, 4, 5. I like it. So that is the bearish alternative. IWM. Note the IWM already bottomed in May 12th, not on the 23rd. It bottomed 2 weeks essentially before the major indexes bottomed. I can count a clean 1, 2, 3, 4, 5 waves higher with a subdividing wave 5, where corrective waves are down candles. Very nice. I like it. An A, a B, and a C lower for wave 2. Another impulse higher, 1, 2, 3, etc., etc., etc. You can review the chart and you'll see you barely miss a beat with this type of trading. And it could suggest that we have completed wave 3 at the 123.6% extension of wave 1, measured from wave 2. Wave 4 should now be underway as a B, C, and then ideally another wave 5. Here is then the critical overlap level. If we go below the top of wave 1, that will mean 2 things. We only had 3 waves up. That was corrective and will go below the May 12 lows. or we have a leading diagonal potentially, which is also an impulse. Then you simply get 1, 2, 3, 4, and 5. Semiconductors. All right, semiconductors hourly chart since the May 17 high, clean, clear impulse lower into the May 22nd low, I believe it was. Clean impulse higher, corrective, leading diagonal. Look how nasty leading diagonals can be, but it works out really well. Potentially already completed wave 1A, wave 2B underway. Again, not every index is aligned. We even bottomed on different dates for different indexes, and that's in a way good because we don't want everything to be a one-size-fits-all. That is often a little suspect. Here is the NASDAQ 100, 1, 2, 3, 4, 5. Same idea as the S&P 500. We could still tag on another leg, little leg lower, and then a wave 5 to come. The Dow Jones, this has been the chart I've shared with you before I left. And so far, I must admit that there's only 3 waves up on the Dow Jones. Okay, so wave 1, wave 2. This was then the ideal topping zone for 3, for 4, and for 5. We overextended on the wave 3. That's okay. We missed a little bit the downside target for wave 4, which would be here, but we topped right here for this wave 5 of 3C. So potentially this wave 4 is now complete or still underway. We already reached the ideal wave 4 target zone, but it can always become more complex. Okay, so also the Dow Jones suggests we can still do a little bit of more sideways down type of overlapping price action. So the jury is still out there, not fully decided yet on the Dow Jones either. Though again, the S&P 500 does look nice and clean and clear and crisp for a 1, 2, 3, 4, 5 to the upside ending June 2nd. I like it. So I give more weight to the daily chart because the daily chart is definitely more easy to interpret than the hourly chart, because remember, Elliott Wave is interpretive. And the more we need to interpret, the more likely we're going to make a mistake. That's why the yearly chart is so beautiful. If you only have 100 candles, it's very easy. It's very difficult to make a mistake. If you have an hourly chart and you have thousands of hourly candles, you easily make mistakes in your Elliott Wave assessment. We're all prone to making mistakes. Nobody's perfect, but so far things have been progressing quite nicely. When things are clear, eventually market will move to something that is less clear. It was really clear on May 27th, followed the exact path, down, up, and now we are assessing if we are complete to the upside, yes or no. Let's look at some market breadth indicators. The AD line, a little bit higher today, so that's good, even on a down day. I like it. The new lows are quite benign. Still a little bit for the NYA, not so much yet for the NASDAQ, still a little bit high. I want to see it below 50. We haven't gotten there yet. So that is still a little bit of a concern. PMO index is at the top of its range. So that, in a sense, is an indication of not the best buying opportunity. That was here when we went from a sell to a buy after the longest period in human history being at 0. It really is, I think. So this one is also close to top, but again, it can take a while, just as it can take a while for bottoming. But we don't have a sell signal yet. That is pretty much the takeaway. So put-call ratio, similarly, is still pointing higher. There's no topping sign just yet. Now, here's an interesting article by an analyst I greatly admire, Tom Asprey. He's been around much longer, almost longer than I'm alive, and he has always great insights. He is a technical analyst, and he wonders what the doom and gloom forecasters are missing. This morning, I browsed through my Twitter feed. The best thing I did all week last week is not being on social media. There's not much social about social media, by the way. And he does technical analysis. First and foremost, we had a positive monthly jobs report on Friday. That's good for the economy. Recessions don't really have a flavor of more people working. It's quite the opposite. Now we got a decline, but that decline can be easily explained with a simple fourth wave. The manufacturing index came better as expected. It's at 56.1. It needs to drop below 50 to signal that we're in a contracting environment. So we're not even close. All right. Some other things were negative. Nothing is all positive. So that is quite interesting. Sentiment-wise, again, it's down the drain. On Twitter as well, all I see are bearish Elliott Wave counts. Interestingly, the bears never present a bullish alternative. I wonder why. But again, the bears have essentially never been right since the beginning of the stock market, except for maybe a few years here and there. So I don't trust it too much. But price will decide. And if we then look at, for example, something that I don't agree with Tom, is that he says there was a breadth thrust, a Zweig breadth thrust. He said it went from below 41 to over 61 in 10 trading sessions. Now, my data might be wrong. I'm using stock charts, but according to my data, we missed that cutoff by 1 day. It should have gone over 61.5 by May 26, because on May 12th, we were still below 40. The Zweig breadth thrust means that the indicator, which is based on market breadth, goes from below 40% to above 61.5% within 10 trading days. So if we look then that we say we bottomed, the indicator bottomed on May 12, then it has, of course, to reach above 61.5 by May 26. Well, it didn't do it because on May 26 it was 60. Close, but close and no cigar. So I just wanted to point that out. So there was, in that sense, no Zweig breadth thrust. Do we need to have a Zweig breadth thrust? No, it's a very rare signal. There was a Zweig breadth thrust here in 2019. That's on this chart since the beginning of 2017, the only Zweig breadth thrust we had. There was no thrust event from the March 2020 lows. Look what the market did. So is it necessary to have a bull run and a Zweig breadth thrust? No, not at all. There was no Zweig breadth thrust in the fall of 2020, etc., etc. So we don't have to have a Zweig breadth thrust to say and signal that we are in a new bull. Would be nice because it's additional weight of the average. This one got very close because the very next day, that is on day 11, we got a thrust event, but it doesn't meet the criteria, to be technically honest. Now, again, I don't know if my data is correct, but I do believe Stock Charts has correct data. So that is really, I think, the gist of today's update. First and foremost is that we've completed so far the pattern that I was looking for: a micro 4, a micro 5, a minute 4, and potentially a minute 5 into the ideal 176.40% extension. Wave 4 can always become more complex. I really don't want to go below 4040. Okay, 4040 needs to hold. This is the line in the sand. I'm going to put it out there. 4040 needs to hold for wave 4. There you have it. Okay, if we don't, then I think we can target this wave 2/B, because then we did 5 waves higher. Very simple. Okay. Alternative is that we only got a very complex A, B, C pattern, and total collapse is upon us. The daily chart, however, also suggests that we have 5 waves higher. So after 5 waves up, expect at the minimum 3 waves down. Not too complicated. The IWM seems to be a slightly different wave count so far. Bottomed already May 12th. Everything still looks impulsive to the upside and corrective to the downside. I didn't label this couple of days of price action, but also this here looks corrective, ABC. Okay, and then look at this, clean, clear, impulse higher based on the hourly candles. 1, 2, down hour, and then straight up, 3, 4, down hour, 5. Okay, and now we're in a messy potential wave 4. Semiconductors the same. Prove me wrong with this chart. It fits really, really well. Look at this. for example, as well. 1, 2, 3, 4, 5. Everything aligns, everything matches really nice. Should now be in this wave 2B. We'll see how this is going to develop. NASDAQ100, NASDAQs are in the same predicament. Can we still get a wave 4 and then a wave 5, or are we already done? Okay, as we say in Elliott Wave, don't trust or don't bank on the fifth of the fifth wave, so to say. So maybe now is a good time to sit on our hands and wait and see how things are going to develop. We've completed the path I laid out on the 27th. So now we're going to wait and see what cards the market are going to deal us now. Same for the Dow Jones. And we do still have reasonably positive breadth readings, but we did not get a, in my humble opinion, breadth thrust event, though it came awfully close. We missed it by a day, and everything else still looks positive. So that's all I have for today. Everything will be on the charts. I think it will be very easy to see. I'll add some annotations on where things need to bottom, unless we then, if we break below those levels, move lower, and where we need to break out to consider that we still have this last minute 5 wave to go. Thank you so much for listening. Take care, trade safe, and I'll see you all on Wednesday.